welcome to the stream. I believe you can hear me. If you can hear me, drop a comment. Drop a comment loud and clear. Welcome. How has been trading this week? I hope it's been profitable. I would like to know how your week so far. Today is Wednesday, the 22nd of October. I hope it's been profitable. I'd like to know in the comment section. If it is profitable, type profitable. If it has not been profitable, type not profitable. I'd like to know in the comment section. I'd like to know in the comment section. You're welcome. You're welcome. Thanks for joining. Can you hear me? Can you hear me? Can you hear me? Can you hear me? I'm waiting for your response. I'm waiting for your response. How has been trading this week? I have executed 2 trades this week on GBP USD and Euro USD, and both trade its stop loss. Both trade its stop loss. How has it been at your end? I'm waiting for your response. I want to be sure you all can hear me before I start the class. I want to be sure you all can hear me before I go to the charts. Waiting for your comments. Waiting for your comments. Can you hear me? Can you hear me? Okay, let me assume you all can hear me. So we'll go straight to business. So we'll start by looking at the calendar. Let's see news we'll be having for today. Confirm you can see my screen. Confirm you can see my screen. So today, Wednesday, October 22nd, Mr. Chris, good morning. Great Britain released its CPI data, and as you can see, the data was negative for Great Britain. You can see, I believe you can see my screen now, Mr. Jimo. So you can see that the news came out negative for Great Britain pounds. Okay, so you can see the forecast was 4.0 and the actual came out negative. Actual is less than the forecast. That's why it's negative, which means that the Great Britain pounds is expected to lose value. The Great Britain pound is expected to lose value. And if you look at the charts, GBP USD, you can see this was the time the news got released, 7 a.m. Nigerian time. That was when the news got released. And you can see that immediately the news got released, Great Britain pounds started losing value. You can see Great Britain pounds started losing value. So it started selling immediately the news got released. And you can see from this point to the current market price, you know, GBP USD, so that's like did over close to 70 pips, close to 70 pips. You can see that close to 70 pips because the news was negative for Great Britain pounds. You can see, so it's lost value, lost value. Okay, so that's it. So that's the only major news we have today. That's the only major news, CPI from Great Britain. So let's go to the chart and look at dollar index. Now, the dollar index is used to measure the strength of the dollar. Before you place trade on major currency pairs, that is pairs that have dollar as the base or the counter, there are 7 major currency pairs, okay? 7 major currency pairs. Let me go to the chart and show you the 7 major currency pairs. Okay, so these are the first 5 pairs or 6 pairs you have here are major currency pairs. GBP USD, Euro USD, USD JPY, USD CAD, Australian dollar, USD 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Then we have NZD USD, NZD USD, and which other one is not here? USD JPY is here, USD CHF, USD CHF, and NZD USD. This is NZD USD, and we have USD CHF. Those are the 7 major currency pairs. Before you analyze these pairs, before you execute these pairs, you are advised to analyze dollar index to know if dollar index is bullish or bearish. And having that information will give you an idea of the trend on these currency pairs. I hope that is clear. We do not trade dollar index. We just use it in determining or defining the trend or the strength of the dollar. I hope that is clear. Okay, so let's start with the daily time frame. As you can see on the daily time frame, you can see dollar index has been since the market opened. This was a Monday candle, Tuesday, today is Wednesday. So you can see that the dollar index has been bullish. It has been bullish. And that was my bias for the week. My bias for the week was that dollar will be bullish, and it's been bullish, as you can see. Okay, so it's most likely going to come and fill this fair value gap. Okay, dollar index most likely going to fill this fair value gap this week. This is the target for dollar index. Okay. I was expecting dollar index. That's the reason I sold the dollar on Monday and also on Tuesday. That's the reason I sold the dollar. I was expecting it to first come fill this fair value gap. That was my expectation. I was expecting it to come and sweep the liquidity reserve just low before going to fill this fair value gap, but it didn't play out as I expected. Okay, my plan was that on Monday, Tuesday, I would sell the dollar. Then today, Wednesday, I will. But as you can see, it didn't play out as expected. That is the reason I took a loss on GBP USD and Euro USD. So as you can now, the dollar is bullish. It is bullish, but I will not advise buying the dollar from the current market price. I would not advise buying the dollar from the current market price. This is where you should have. This would have been the best entry for bullish dollar. If you had wanted to buy dollar, this is where you should have bought dollar. So if you didn't buy the dollar from this point, I would not advise that you buy it from this point. If you want to buy dollar, I would advise you wait for a retrace. Wait for price to retrace back to, you can see it has created a fair value gap here. You can see it has created a fair value gap here. So you should wait for price to retrace. Buying from the current market price, as far as I'm concerned, is risky. Though the dollar is still bullish, but buying from the current market price, as far as I'm concerned, is risky. So if you want to buy the dollar, I would advise to retrace back to this zone. It should retrace back to this zone, which is about, I think, 50%. Using the Fibonacci to 50% retracement. Okay, let me apply the Fibonacci tool. So from this low, swing low to swing high, wait for back to at least equilibrium. Wait for price pull back to equilibrium, which is level 50. Level 50, okay? So wait for price to pull back to this zone. This will be the very good area to consider buying the dollar, okay? So for today, I am bearish on the dollar. For today's market, I am bearish on the dollar. I want to see the dollar pull back to this zone, okay, before going bullish. So I'll be selling, I'll be looking for opportunity to sell the dollar today. But as it is right now, I can't take the sell trade because I can't identify a bearish reversal pattern on the daily time frame, on the 4-hour time frame. I can't see my pattern, I can't see my setup right now. Okay, so I'm going to patiently wait for price, for my pattern, my bearish pattern to form before taking a trade. So you can see the previous 1-hour candle closed as a shooting star. It closed as a shooting star. So if I would sell the dollar, I would love to see price break the low of that shooting star. I would love to see price close below the low of this shooting star. That is when I will consider selling the dollar. But right now, buyers are still in control. Right now, the buyers are still in control. So all I'll be doing right now is just watch. Okay, I'll just watch while I wait for price to close below the low of the shooting star for me to sell. Good morning, Mr. Isaiah. If there's any pair you want me to analyze, let me know in the comment section. If you have any question, let me know in the comment section. Drop it in the comment section. If you're here to give the video a thumbs up, please give it a thumbs up so that others can get to see this video. Give the video a thumbs up. And if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Ensure you're subscribed to the channel. Okay, so next we'll need to look at yen basket. Yen basket, we use this to measure the strength of the yen. Okay, GBP, JPY. All right, we use this to define the strength of the yen. We want to know if yen is bullish or bearish, and that will determine the trades we will take on JPY pairs. If yen basket is bearish, we want to buy JPY pairs. If yen basket is bullish, we want to sell JPY pairs. I repeat that. If yen basket is bullish, we want to sell JPY pairs. If yen basket is bearish, we want to buy JPY pairs. How that display? So let's start with the daily time frame. Okay, so we can see yesterday was strongly bearish. You can see yesterday was strongly bearish, and after the close of yesterday candle, let's see the pattern we had on 4-hour. Let's see the pattern we had on 4-hour. Okay, so you can see what we had on 4-hour yesterday. We had an inverted hammer before the close of the market yesterday. And also you can see here that I think price came back to fill, you can see, price pulled back to fill this fair value gap. Okay, price pulled back to fill this fair value gap. This fair value gap has been filled and the market is currently trading above this fair value gap. If I'm going to take any risk on yen, it has to be a buy. Okay, if I'm going to take any risk on yen today, it will be buy, bullish on yen. I would only consider bear selling if price breaks out from this support. The fact that the market is trading above this zone indicates that we have more buys, more demand than supply. Okay, so I'd rather go for buys on yen today than sells. Okay, so that's it on a 4-hour time frame. Let's see what's happening on 1 hour and 15 minutes time frame. Okay, so you can see this retracement here. This retracement, this sell that happened here is as a result of this fair value gap. That's the reason for the sell. This fair value gap that was created here, this fair value gap is the reason for the sell, for that retracement. Okay, so you can see price pulled back at this point to fill the fair value gap, and it created a liquidity Liquidity was created at this low, you can see. So what they did this morning was to come and sweep. You can see they came to sweep this low. The most retail traders have executed buy after the formation of this armor. Most retail traders have executed buy last night after the formation of this armor. And where would they have their stop loss? Their stop losses will be residing at this low. So what they did this morning was to come and sweep the liquidity residing at this low before going bullish. Okay, so my bias on yen is buy. Most likely yen is going to come sweep. This will be the first target. If it breaks out from that, the next target will be this high. And its final target could be this fair value gap. That is what I see on yen. That's what I see on yen. Okay, so my bias on yen is bullish at the moment. It is bullish. Okay, so it has created a fair value gap here on 1 hour. So price might want to retrace back to fill this fair value gap before it continues with its bullish ride. I hope that is clear. Okay. GBP CHF, GBP JPY, Mr. Chris, GBP JPY, GBP CHF, and gold. Okay, Jolo boy. Okay, so let's look at GU and EU before we look at other instruments. So GU is still bearish at the moment, but I'm looking for opportunity to buy. Okay, so as you can see, GU has been bearish since the market opened. Monday, Tuesday, Wednesday, GU has been bearish. As you can see on Friday candle closed as a spinning top. That could also be the reason why dollar GBP USD has been bearish. You can see Friday candle closed as a spinning top. You can see that. So let's see what's happening on 4 hour. Okay, so on 4 hour we have this fair value gap, which could be target, which could be the next target. This fair value gap on 4 hour will be the next target for GBP USD. Okay, this fair value gap will be the next target for GBP USD. So after this fair value gap gets filled, if a bullish reversal pattern forms, I will look for opportunity to buy the GBP USD, and my TP will be this level. This will be my first target. That will be my first target for GU, and this will be my second target for GU. And my final TP might be this high. My final target will be this this high. Okay, so that's my plan for GBP USD. I would not advise selling. I will not advise that you sell dollar from the current market price. As you can see on the daily time frame, GBP USD has been selling since on Monday, so you cannot sell from the current market price. You should have entered sell at the open of the market on Monday. If you had sold from Monday, you would have made so much profit. By now, you will be out of this trade. By now, you will be out of this trade in massive profit. Over 100 pips. You would have made over 100 pips. So if you didn't enter at this point, it will not be reasonable for you to enter at this point. It will not be reasonable. If you want to sell, you should wait for price to reverse back to a premium area. Wait for price to reverse back to a premium area before you sell. That is my take on GBP USD. Selling from the current market price is at a very high risk. As you can see, if you apply your Fibonacci from this swing low to this swing high, you can see that price is currently at a discount area. So you are not supposed to sell at a discount. You are supposed to buy at a discount area. You can see that. Okay, so that's my take on GBP. I'm looking for opportunity to buy, but my pattern has not formed yet. My pattern has not formed there. Mr. Jimon, drop your question. Drop your question in the comment section. Just drop your question. It will be attended to. Your question will be attended to. Okay. So that's my take on GBP USD. Let's see Euro USD. I'm bullish on GBP USD today. Okay. So this is GBP Euro USD. Now Euro USD this week might drop to this. Okay. GBP USD might drop to this zone. Euro USD, I'm sorry. Euro USD might drop to that. That's the next target for Euro USD. Okay, I think the major news tomorrow, there is no major news. On Friday, okay, CPI will be released on Friday. US CPI will be released on Friday. So most likely on Euro USD might drop to fill that fair value gap. Okay, that's my expectation on Euro USD and GBP USD. My plan is to sell Euro USD and GBP USD on Thursday or Friday. Thursday on Friday. The major moves on these pairs, on GBP USD and Euro USD or dollar pairs, would happen on Friday. It's going to take place on Friday. It's going to take place on Friday. Okay, so as you can see, since the market opened, Euro USD has been bearish and it's still bearish. So it's likely coming to fill this fair value gap. Okay, my expectation was that you can see on this daily time frame, last Friday, candle closed as a shooting star. And after closing on the shooting star, I think it created a fair value gap. Let's go to 4 hour. So you can see this fair value gap. This was the reason I took buy on Euro USD, but it didn't play out as expected. You can see this fair value gap here. I was expecting price to first come and fill this fair value gap before it goes for the sell side. You can see this fair value gap on 4 hour. That could be the target. You can see this fair value gap. So I was expecting it to first come and sweep or fill this imbalance here that is created on Friday before going bearish, but it didn't play as expected. Just pulled back, but it didn't fill the gap before it started selling. Okay, so I still expect it to pull back. Okay, before coming to fill this fair value gap and also the fair value gap I identified on a daily time frame. Okay, that is my expectation. I still expect it to do a little retracement before selling. Okay, so today I'm looking for opportunity to buy. Let's go to 4 hour. Okay. I would love to see it a fair value gap here. I would love to see it pull back to this zone. Okay. I would like to see it at least pull back to this zone before looking for opportunities to sell it. Either this zone or this zone. That's my expectation for the Euro USD today. But at the moment, it is still bearish. I cannot buy it at the moment. I can't buy it at the moment. It's still very bearish. It's still very bearish. Most likely, it's going to come fill this fair value gap before going bullish. It might fill this fair value gap on the 4 hour time frame before going bullish. I hope that is clear. So that's my take on Euro USD. Okay, so let's look at GBP JPY. Like I said, I am bullish on the yen today, meaning I should be looking for sales on GBP JPY. You can see. So as you can see, GBP JPY has been, let me start with the daily time frame. So today, GBP JPY has been bearish. You can see it's been bearish. Yesterday, it was bullish. It was bullish yesterday, and after the close of yesterday candle, I think we had a bearish reversal pattern on, you can see the pattern we had on 4-hour. You can see the pattern we had on 4-hour. It's a bearish reversal pattern. Can you see that? It's a bearish reversal pattern. They swept the liquidity, right? Liquidity that was residing at this previous high was swept yesterday before it started selling. You can see. So it sold, and I think it is still bearish at the moment. It's still bearish at the moment. Before selling, I would love to pull back. So you can see it has created a fair value gap here. I would love to see price pull back to this zone. Okay. I would love to see price pull back. You can see we have resistance or support on resistance. This support on resistance, which is a mitigation block. We have this mitigation and we have this fair value. I'd love to see it pull back to this before going bearish. That's my take on get with £10 JPY. I'd love to see it pull back to this zone before going bearish. Okay? I will not advise that you sell from the current market price. Don't sell. You can see where price started selling. It started yesterday and it's been bearish. So if you want to sell DJ today, patiently wait for price to pull back to this zone. A very good area to selling GBP, JPY. I hope that is clear, Mr. Chris. I hope that is clear, Mr. Chris. Mr. Jimo, I'm still waiting for your question. I'm still waiting for your question. If you are yet to give the video a thumbs up, please do that now. Give it a thumbs up. And if it's your first time joining the live stream, I appreciate you for joining. Please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Okay, so that's my take on GBP JPY. Okay, the next pair here is GBP CHF, GBP CHF, GBP CHF. Let's start with the daily. See that all GBP pairs sold immediately the news got released. All GBP pairs sold. Okay, all GBP pairs sold. So let's see daily. You can see it's been bearish, and I think it is still bearish. Here's CHF is still bearish. Okay, it has swept this liquidity. It has swept this liquidity. I think at this point, we had a fair value gap. Let's see, we had this fair value gap. I think there was a fair value gap here. Let me go down to lower time frame. I think there's a fair value gap. Let's see, 15 minutes. We had this mitigation block here. We had this mitigation. Let's see. Price pulled back. Okay, so there has been strong rejection from that gap. So with what I'm saying here, it's likely GBP CHF would be bullish today. Okay, so good. This is a good pattern. You can see the pattern we had on you can see spinning bottom, spinning candle. If the current 1 hour closes bullish, then you should expect buys on GBP CHF. Okay, if I'm to trade GBP CHF, if the current 1 hour candle closes bullish, I would risk buying. I would risk buying and I'll set my stop loss 20 pips below this low, the low of this candle, 20 pips below this low. And my target, my first target will be this level. And my second target will be this relative equal highs, these highs. That will be my second target. Okay, that will be my take on GBP-CHF. If I'm going to risk trading GBP-CHF, it will be bullish. It will be bullish. It will be bullish. Okay, so that's my take on GBP-CHF. Now, Mr. Jima is asking if the actual is greater, if it's greater than the forecast, just as you mentioned, does that means we can follow the trends? Sometimes it does not play out as expected. Sometimes the actual value might be better than the forecast, and the market will not obey the direction. Okay, sometimes it doesn't play out as expected because you're trading two economies. For example, if you're trading GBP USD, you are trading Great Britain economy against the US economy. So let's say GDP data was released. Okay, today GDP was released for Great Britain, and the data came out negative for Great Britain. If the data that was released for the dollar, that is GDP data that was released for the dollar, if it is worse than the data released for Great Britain pounds, Great Britain pounds might still gain value against the dollar. Are you getting what I'm saying? So you need to compare the data. GDP for United States, GDP for Great Britain. Compare both. That the data came out negative for Great Britain pounds does not mean it will lose value against the dollar. If the data that was released for the dollar was worse than the one released for Great Britain. Are you getting me? So it's not every time the actual comes out negative for that currency that the currency will now lose value. No, it's not all the time. Sometimes that same currency would gain value. I hope that is clear. I hope that is clear. That's why you need to also look at your technicals. You also need to look at your technicals. Okay, so if the news comes out, okay, for example, let's see Great Britain USD, GBP USD, GBP USD. Okay, so look at what we had before the news was released. This is 1 hour time frame. Before the news got released, we had a shooting star, which indicates change in trend from bullish to bearish, right? We had a shooting star, which indicates change in trend from bullish to bearish before the news was released. Now, the news got released and it was negative for Great Britain pounds. So your technicals indicates that there is more supply, okay, for GBP USD than demand. It has already the pattern here has already indicated that GBP USD is likely going to sell. And the news that came out, the data that came out from Great Britain pounds on GDP was also negative. So you can see that there is agreement between the technicals and the fundamentals. You can see that. So you would have sold and probably set your stop loss few pips above the high. I hope that is clear, Mr. Jimo. So don't say because the news is positive, you buy that currency pair. No, sometimes it will be weak. Sometimes it will be weak. It will do otherwise because the other economy, the data that was released for that other currency that you are trading it against is better than what was released for that currency. I hope that is clear, Mr. Jimo. I hope I answered your question, Mr. Jimo. I hope I answered your question, Mr. Jimo. So one more pair, that's gold. I think, yeah, Joro Boy requested for gold analysis. Gold has been bearish. Gold has been bearish. I hope you didn't lose money on gold. I hope you didn't lose. If you made money on gold, if you made money selling gold, drop a comment. I know a lot of people would have blown accounts with this strong bearish move that happened yesterday on gold. With this strong bearish move that happened yesterday on gold, I know most traders would have lost their money. And that is why I always advise that you apply stop loss on every trade you execute in the market. Always apply stop loss. Always apply stop loss. If the actual is greater than forecast, it is good for that currency. If actual is greater than forecast, it is good for the currency. If actual is less than forecast, it is bad. It is negative for that currency. That currency is expected to lose value if forecast is less than, if the actual is less than the forecast. Okay, so that's why I always advise that you use stop loss on all your trades. So yesterday, I think gold did over 3,000 pips. Gold did. You should be glad that you closed your trade yesterday, Emmanuel. You should be happy that you closed your trade yesterday. You should be happy that you used stop loss yesterday. If not, that your account you would have blown that your account. You would have blown that your account. Be happy that you used stop loss. You applied stop loss. So yesterday, gold sold did over 3,500 pips. Over 3,500 pips. 3,500 pips. So if you had $300 in your account and you apply 0.01, which is the minimum price, you would have blown your $300 account yesterday without using stop loss. Use stop loss. If you don't use stop loss, you're going to blow your account. You're going to blow that account. The probability you blow that account is very high. It is very high. So you have to apply stop loss before you execute a trade. If you don't know the risk, don't place the trade. If you don't know the dollar amount you're going to lose on that trade, don't take the trade. You're just going to blow your account. You would blow your account. I've been trading for over 10 years now. Everything I share with you guys is based on personal experience. What I've experienced in the market is what I share with you. Is what I share with you. Personal experience, not what I watch on YouTube or I heard some. It's my own personal experience. Not using stop loss cost me a lot of losses, cost me money. I lost so much not using stop loss, adjusting stop loss when the market is approaching my stop loss level. These things made me struggle, made me lose money in the market. And that's why I always advise, always use stop loss. It only takes just one trade to sweep all profits that you have made over a period of time. Just one trade against you will take away all the profits. You start it all over again. So please always use stop loss. So as you can see, gold is still bearish. It is still bearish. Though it has filled this fair value gap. So I expect gold to buy anytime soon. You can see yesterday it came to fill this fair value gap, and there was a strong rejection. Probably they might just want to sweep this low. Okay, I think this was first candle for today's market. So you can see this is an hammer. This is an hammer. The next candlestick close. Most retail traders would have executed buy. Most retail traders have executed. So they might come to sweep this liquidity up. I think it has created a fair value gap. It has created a fair value gap on the lower time frame. Let's confirm that. Let's see 15 minutes and 1 hour. Probably it's created a fair value gap that it wants to come and fill. Okay, so this is 1 hour. Let's see 15 minutes. let's say 15 minutes. If you want to buy gold today, okay, so this is 15 minutes. This is 15 minutes time frame. So we have this fair value gap here. You can see. You can see this fair value gap here. You can see. So let's see if it will respect value gap. Let's see if it will respect this fair value gap. Okay, let's see if it will respect this fair value gap. So if you want to, I would advise you wait. Okay, so this is 5 minutes. Let me see 1 minute. If you want to risk, let me see. Okay, if you want to risk buying gold, you wait. I would advise you wait for price to break out from this high. Wait for price to break out from this high. You cannot buy from the current market price. Wait for price to break out because, like I said, they might want to sweep this liquidity. They might want to come and sweep this liquidity. So before you buy, I would advise you wait for price to pull back and close above this high before you buy. As you can see, it is still bearish. It is still bearish. So they might come for this liquidity because they know the traders have executed buy after the formation of this candle, this hammer, and they might come for their stop losses. That is my take on gold. Okay, look for opportunities to buy, but this is not the right time and price to buy gold. This is not the right time and price to buy gold. I hope that is clear, and I think that will be all for today's session. Do you have any question? Do you have any question, Mr. Chris, Mr. Isaiah, Joro Boy? If you have any question, let me know in the comment section. I appreciate you all for your participation. Do you have any question? In the next 2 minutes, I want to end this session. Do you have any question? Let me know. Let me know in the comments. Let me know in the comment section if you have any question. Let me know. Let me know. Okay, Mr. Chris, drop your question. What's your question, Mr. Chris? Question, Mr. Chris. Let's say yesterday candle closed positively bullish. Is it possible for the let's say yesterday candle closed positively bullish. Is it possible for the pair to sell without sweeping the previous candle? If yesterday candle closed positively bullish, yes, it's very possible for the next daily candle or the next day to be bearish. It's very possible, but you need to identify the pattern on. You need to identify the pattern. You need to learn how to analyze the market using multiple times. Okay, you need to learn how to analyze the market using multiple time frames. So if the daily candle close strongly bullish, you need to go down to lower time frames to confirm if a bearish reversal pattern forms on those time frame. Okay, you need to go down to lower time frame to confirm Can you all still hear me? Can you all still hear me? Can you 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 hear me? Okay, so as I was saying, you need to on GJ. Yesterday on a daily candle, we closed bullish, but today we are looking for sales without taking the high of yesterday. Okay, now let's see the GJ. Let's see GJ. So you can see yesterday GJ closed. So yesterday GJ closed. Okay, let's look at the chart on GJ. Okay, on GJ, you can see, okay, it closed strongly bullish. Now, after closing bullish yesterday, let's go down to lower time frame. Okay, let's go down to lower time frame. So you need to know how to use multiple time frame. You don't just focus on just one time frame. You need to know how to analyze the market using multiple time frames, starting from the higher time frame to the lower time frame. So after the close of yesterday, let's see the pattern we had on 4 hour. It should be a bearish reversal pattern. You can see it's a bearish reversal pattern we had. You can see that we had a bearish reversal pattern, and after the formation of this bearish pattern, let's go down to 1 hour. So you can see we had this fair value gap it's created on 1 hour time frame. You can see we had this fair value gap it's created on 1 hour time frame. And yesterday there was an attempt, it actually filled this gap. You can see these two candles here. Okay, you can see these two candles here, and price pulled back this morning, pulled back to that zone. You can see it pulled back to that zone. Now the attempt here was to fill this fair value gap. The attempt here was to fill this fair value gap, but because of the major news that was released, the gap here didn't get filled. That's the reason for this sell. The negative data that came out for Great Britain is the reason for this sell. In a normal market condition, they would have filled this fair value gap or come to sweep this liquidity before going bearish. So one of the reasons the market didn't fill this gap or sweep this liquidity is the major news that was released. That's the reason. So most times after the close of the daily candle, like we had on GJ, if you want to sell today, if you insist on selling today, now you've confirmed on a lower time frame, 4 hour time frame, that there's a bearish reversal pattern. You either wait for price to pull back and sweep liquidity, or wait for price to pull back to fill the fair value gap it created. Is that clear? You should sell from the fair value gap, or you wait for price to fill the to sweep liquidity. I hope that is clear. I hope that is clear, Mr. Chris. Always wait for price to pull back to, so for example now, if you apply your Fibonacci to from this swing high to this swing low, this was what we had yesterday when the market closed on 1 hour. This was what we had, right? This was the candles that formed. This was the last candle for yesterday market. So if you had applied your Fibonacci from this swing high to this swing low, what played out today? Price pulled back to a premium area. You can see price pulled back to a premium area. So you're advised to always wait for price to pull back to a premium area, or wait for price to pull back to a fair value gap, or sweep the liquidity before you start selling. I hope that is clear. I hope that is clear. All right. So that'll be all for today's session. I think our next session will be tomorrow morning by 10 a.m. I wish you all a profitable trading day. Please, as you trade today, be very conservative. There's a lot of things that is happening all around the world that is really affecting the market. You can see the impact on the market, the volatility. You know, most pairs they've been ranging and all that. A lot is happening all around the world. The truth is that at the moment, the market is not in a good condition. in a good condition. It's not in a good state. So you need to manage your capital while you are trading. You need to manage your capital so that by the time the markets, everything now gets better, then you still have funds to trade. So whatever loss you made now, you should, when the market gets better, you should have capital to recover whatever loss you've made now. So now you should be very conservative. You should be very conservative. There's a lot of speculation on gold, a lot of speculation on the dollar. So you have to be very careful. You have to be very conservative. Please be conservative. You don't want to blow those funds you have in your account. Be conservative. Okay? Be conservative. Don't try to flip your account. Don't try to flip your account. Many who have tried to flip their account, most of them they are frustrated, and most of them have quit trading. Don't try to flip your account, please. Take it easy. Take it easy on your funds. Bye for now, guys. Bye.